Let's get in touch with the management of Muthoot Microfinance. Weak set of Q4 numbers coming in from the company. The stock is currently reeling under pressure. Let's pull up Muthoot Microfinance, see what that stock is up to, and deep shade of red coming in, 10.5% cut coming in on that stock on the back of a poor set of numbers. The net interest income has slipped almost 20%. There's been a loss of 401 crores compared to profit of 120 crores this time last year. Disbursements have also taken a hit of 24.5%. Let's understand the earnings fine print and also what panned out for the company in the quarter gone by, and let's welcome on board the management of Muthoot Microfinance. We have Mr. Sadaf, Sayeed, the CEO of the company, who's joining us. And Mr. Sayeed, good morning. Let's understand a little bit about your financials. But before that, the company has said that the rejection rate will increase by another 8% in Q1 FY26. Help us understand how much this will impact your business in Q1, and going ahead, when do you anticipate this to stabilize?
Due to the new guardrails which have come into effect from 1st of April, and even the earlier guardrails that MFin had recommended and Sadaf has recommended, it had an impact on the throughput. The rejection rates have gone up from around 30% prior to all of this guardrail to almost around 50%. The new guardrail has further increased the rejection rate by 3%. But I believe that all of this is for a long-term sustainable future of the microfinance industry. The guardrails are to ensure that the over-leveraged clients are not further burdened with additional loans. And we are seeing a very positive impact for that. Even for our portfolio, if you look at our customers as a percentage of more than 4 lenders have come down significantly. It has come down from around 8% to now around 6.8%. And overall, if you look at our unique customer percentage have also improved from 32% in Q2 to around 35%. And still with the guardrail, I think around 83% of our customers remain absolutely unique. Our effort is to focus on our existing customers whom we are catering and maintain that exclusivity and ensure that we offer multitude of products to our customers and satisfy their need. I think this in long term will play out well. We have laid down a strategy of multiple products that we want to offer to our customers and diversify our balance sheet between secured and unsecured business. We can serve these customers better and provide them loans at a much better rate. So we are planning to do that as well. Similarly, we will finance two-wheeler finance also for our customers. And all of this will yield into a well-diversified portfolio. And it will also help us capture the wallet of a good repaying customer and improve the profitability and improve margins on our business.
All right, Mr. Sayeed, this is Shriyansi as well joining in the conversation. I wanted to get your picture as well as far as the confidence is concerned, because you do hope to be back on track when it comes to financial year 26. I want to know what gives you that confidence at this point in time. Until when should we see complete normalization? What is your outlook when it comes to profitability as well?
We have already taken the provisions that are necessary. As I mentioned, we have carrying a 230 crores of buffer provision, which is on a management overlay. We have sufficient cover on our portfolio. We don't anticipate any shock to come in future. I think Q1 we are seeing good traction. April month was a better month in terms of collection efficiency, in terms of disbursement. The company will definitely turn profitable. And going forward in Q2, I anticipate overall this microfinance stress to go down, and Q2 onwards, which is the more productive cycle of microfinance business, Q3 and Q4, it will be very good. And we are very confident of reaching to around 2% ROA in the current financial year and maintaining a growth of around 5 to 10%. And this is a conservative estimate. We will definitely do better than this.
Okay, Mr. Sayeed, also talk to us about your asset quality, because after a sharp increase in fresh delinquencies in Feb, March has shown a decline. And have you seen further decline in the quarter that's underway right now? And should we expect improvement in NPAs going forward, or do you expect them to remain at elevated levels?
So I think this is the peak of our GNPA. Our GNPA is at around 4.84%, which is an increase from 3.03% last quarter. Our net NPA remains stable. We have ensured that we are able to provide and write off whatever is necessary. So we have 1.34% as our net NPA. And this is the peak. We are seeing collection efficiency return back. We have X-bucket collection efficiency for the month of April has been 99.5%. So we are able to collect sufficiently. And overall collection efficiency for the last financial year was 93.6%, close to 94%. This is also improving on month-on-month basis. We have done a vintage analysis of our portfolio. It shows that the origination, which is done in financial year 25, more recent disbursements, they are behaving well. As I said, this is the peak of our GNPA. Next quarter onwards, we anticipate them to sharply come down.
All right, point taken. Seeing a rebound in collection efficiency, but tell you what, give us a number when it comes to NPA. Is there any sort of guidance that you can share with us then?
So I think we should be below 4%, definitely. We are right now at 4.84. Hopefully, the way the things are growing, and we should be below 4% for sure.
Okay, and let's talk about your X-bucket collections on a geography-wise basis. The company has been able to do 100% X-bucket collections on the digital form, of course, in Andhra Pradesh and Telangana. Give us a sense of what this situation is when it comes to other states.
So other states are also behaving well as compared to previous months. So in Kerala, we have X-bucket 100% collection efficiency. In Tamil Nadu also, we have collection efficiency of 99.5%. Karnataka is the only state where the X-bucket collection efficiency is slightly lower, but all the other state, overall the collection efficiency is around 99.5%.
All right, and when I'm taking a look at your write-off pool, that currently stands at 538 crores. So how much recovery should we expect when it comes to financial year 26 then?
So traditionally, from a write-off pool, we have been able to recover close to 18 to 20% of the portfolio. This trend has held good during the COVID and even prior to COVID. We anticipate same trend to continue. We should be able to recover around 20% from the write-off.
Okay, and Mr. Sayeed, before we let you go, also share with us some forward-looking guidance, anything that you can share with us, what's going to be your focus going ahead? Is there any diversification on the cards that the company is looking at?
Yeah, the only thing the company is focusing on diversification, and we are looking at ensuring that we serve the household better, and we would be able to provide multiple products. Our strategy is to look at gold loans for our customers as well as housing finance and two-wheeler finance. Apart from that, we are the market leader in terms of use of technology. Almost 1.8 million customer out of our 34 million customer are using our Mahila Mitra app. This app would be utilized to leverage on the potential of our customers. That will definitely help us grow faster and ensure that we are able to reach our right customers. Overall, I think the provisions that we have created will give us good foundation. The company continues to have a healthy capital adequacy of around 27.9%. From the capital adequacy point of view, from the availability of liquidity for finance, we are very well placed. So the company has all the fundamentals in place to continue to grow.
If you like this video, then like, share and subscribe to ET Now.